Hey there, today's February 1st, 2019. Stock market closed today. Pretty flat, kind of a boring day in the markets today. Dow did close above 25,000 again, though, 25,063. So just holding on by a thread above 25,000. NASDAQ was actually down today, but still strong overall. For the week, I believe it was up pretty nice, 7,263. S&P was up just a couple points today, so not much going on in the markets today. Probably more as far as individual stocks that I follow, more negative news than positive. We got Site One Landscape Supply we've talked about before. SITE was down another 11% today. That one, this wasn't just a one day thing where with the earnings report, this has been going on for about 6 months actually. If you look at the chart, it's Site One Landscape Supply. Late 2007, it was under $30, went all the way up to, but within about 18 months, went up to 95. So less than 30 up to 95, more than a triple in just a year and a half. And then ever since then, though, it hit that high of 95. It has been falling ever since the middle of 2018. It is fell under 50 today. It's closed at 47.51. Let's see what the market cap is of Site One. I believe it's around 2 billion, might be a little below after today's loss. Not a huge company, but there are a whole lot of landscapes companies out there that are. It did fall below 2 billion today, 1.94 billion dollar. On that one, if you would have done your due diligence too. I mean, you know, you can't always completely predict these things, but even after the fall today, this company still has a price to earnings ratio of 26. So it was expensive. So if you'd have looked at that, you'd have known your risks. Yeah, it was a growing company, or it might still be, but you got to know those risks. If you're anytime you buy stock in a company who has a price to earnings ratio of 50, which it did around that highs, companies now like Amazon and Netflix. Oh, Netflix is um, price to earnings must be. Last I checked, I believe it was a couple hundred. I want to say. So the downside to Netflix is huge. Yes, they're growing, but any little hiccup in that stock is going to absolutely tank. Same with other ones like Amazon. I believe Amazon was down over 5% today, probably because of earnings. That one still, it's come down. It was over 2,000 and it closed at 16.26 today. But let's see what the price to earnings ratio is on Amazon. I bet you it's pretty high. 91. Amazon has a price to earnings ratio of 91. If you don't know what a price to earnings ratio is, look it up. 91, that is high. Typically, utility stocks have around a 14 to 15, but those are lower growth. Technology stocks, higher growth. You're looking at anywhere between, 20 to maybe 25. You get in a position like this where you're at 90 for a price to earnings, and there's huge downside risk there. Um, I'm sure at one point Apple probably had a price to earnings ratio of about that, and now, oh, I believe Apple's is around less than 20, I think. So I would look at Apple as extremely cheap compared to a stock like Amazon. The reason our price to earnings ratio is so high because Amazon is growing, faster than Apple is. But there's a lot more risk to an Amazon or Netflix stock than there is to an Amazon stock. And just because a company has a low price to earnings doesn't mean there's no risk. Once the price to earnings ratio gets too low, then that starts flashing signals that, investors are anticipating growth to be very slow in the future. So that can be a bad thing if the price to earnings ratio is too low, because what happens is sometimes the company stops earning money. Once you don't earn money, once you don't turn a profit, there is no price to earnings ratio because you have no earnings or profit. So you can't measure price to earnings. So sometimes a high price to earnings, it isn't, obviously Netflix and Amazon have had high price to earnings ratios for a long time, and the stock price keeps going up. So it's not a single indicator you want to use as far as investing goes, but it's good to know what your downside risk is, because any stock can fall down to that price to earnings ratio, around 20, like an Amazon or a Netflix. So you got to figure, if you invest in Amazon right now and it's at 91, you got to figure that that stock could easily get chopped by half or more, 70% maybe, to get that price to earnings ratio down. If Amazon doesn't keep up with expectations and keep growing at the rate that they are, that's exactly what's going to happen. You have to know what you're getting into there. And like stock like Amazon and Netflix is not a, a sure thing. There's still a lot of risk there. Um, Mobile Mini, there's I see those around Fargo here. They're like storage shipping containers, um, that I think they rent units, and they're a franchise. I believe they're a nationwide company. They're pretty big, but they fell today on earnings, down over 8%. It's a stock I kind of follow. Not really too interested. It's kind of a boring company, if you ask me. And sometimes boring is good, but personally, I guess I like to follow technology. But Mobile Mini is, let's check it out here quick. This is one that doesn't. It's had some big ups and downs. If you look at the chart, it's actually, it has some huge downs, but it also has grown. You look back in, 1997, it was $1.50, and it's still, even after today, it's around $35. So yeah, it's some nice gains. Let's see if there's any. I'm sure there's no dividend on a company like this. Actually, they're not as big as I thought. Only 1.5 billion, 2.8% dividend, which is not bad. Price to earnings ratio is 22. It's not bad. If that's a company you see some potential in, it's not a bad pick right there. Sony was down 8% today on earnings. Sony down 8%. Don't see a lot of huge moves out of Sony. Let's see. 10 Cent Music. We've talked about that one before. Um, they are a spin-off from company Tencent out of China. They just started trading. Ticker symbol TME here in the stock exchange not too long ago. It's been pretty volatile ever since it hit the market. It's down almost 7% today. Interesting company though. Gainers, there was the stocks that I follow. Wasn't much for. There was a lot of gainers, but no really big gainers. A lot of stocks were up, around that 2% range, but nothing really up. Actually, the largest one I see here is Mankind. It's 6% for that tiny company. Isn't much of a move, but Smart Global Holdings was up 4% today. That's one we talked about. I started following that one after I seen it on Kramer one day. Interesting company. Sort of has to do with data storage. Smaller company, so a lot of potential. They're only less than $1 billion, 590 million, and they've fallen quite a bit. Still down over 50% from their highs. It was beginning of 2018. It was up to about $56. It looks like, and it's only 25.84 right now. So that's one that I've been following pretty closely. Price to earnings ratio of 4.6. That is really low. Book value per share, earnings per share, $5.57. That's a lot. But see, that's when I see the high earnings per share there and the low price earnings, it makes me think that investors um, are thinking that growth is really going to slow down coming up for this company. So I'm sure you'll see some volatility out of that stock from one way or another. That's one to definitely follow. That's one where you could definitely make some money in that stock if they can keep growing at the rate that they are. Let's see. Yeah, not much otherwise than that. Kind of a slow day in the markets today, but I think overall we had a pretty good week. Dow closed above 25,000 for the week. Nasdaq is up pretty high, so everything's looking good. Hopefully, we can get this China thing figured out and get this government shutdown news in the rear view mirror, so we can focus on what matters, and which is earnings. And a lot of these moves are earnings based. But I think this market is just absolutely going to take off here if this trade war with China ends and the government shutdown ends. I think this market is going to go much higher in the short term if that happens. And that could be. I for a while I was thinking that maybe, Jesus, sometimes when the market gets high like this and it's come up from so much, it was down to what, 7,000 the Dow was back in '08, and it's over 25,000 now. That seems like a huge gain for that period of time. So, sometimes it makes me think that there's, a bubble going on. And that's when the price to earnings ratios come in handy, because you can see that, in some companies there, some maybe industries there is, but in general, I don't think we're in a bubble. I think we could get to, I think if the tariffs end and the government shutdown ends and this market takes off, and all of a sudden has this huge leg up to 35,000 in the Dow, I think that's when you're going to be talking major bubble. There usually is. It didn't really happen in '07 from what I could tell. But in most bubbles, there's a huge blow off at the top where everything just goes parabolic. There's days or weeks in a row where everything just goes straight up, and it's just not sustainable. Everybody gets over enthusiastic and thinks that these good times are never going to come to an end. It's almost, it's like a party. So, I don't see that yet. So until that happens, I'm pretty comfortable buying these individual stocks. So and if that does happen, and you're not going to time it perfectly, but I think if all of a sudden you see a few weeks there where the markets are just taking off, it's better to get out a little early than a little late. So I don't think we're in trouble right now, but it's definitely something to keep an eye on. So. All right. Hopefully, we can have another good week next week. Hit the subscribe button if you enjoy this content, and we will see you on Monday.